that's a glaring red blinking light for us in crypto. And let me just put this in perspective. If you go back to 2021, Nvidia was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech, for instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when they can't decide, when investors can't decide, that is not a healthy place to be in the market. So
some tech companies are booming, especially those investing in or implementing AI technology. With the release of applications for retail users like ChatGPT or Midjourney, this hype is real for artificial intelligence. And even though we see companies like Nvidia exploding fast, that doesn't mean the whole S&P 500 is also going up, according to Gareth Soloway from InTheMoneyStocks.com and VerifiedInvestingCrypto.com. Why is that important for us in the crypto markets? Because we know how Bitcoin usually correlates with the S&P and the Nasdaq. So, in today's video, Gareth will explain the current situation for these markets and some of the defensive plays he's taking to protect his money. These could give you some trading ideas and clarity on what to do instead of just chasing the hype on OE stocks or meme coins like Pepe. And by the way, if you missed yesterday's video from CZ, Binance's CEO, you should check it next. In that video, CZ advised on these cryptocurrencies and how to protect yourself in bear markets. But first, let's have a quick look at what's happening with these tech stocks.
right now, it looks like, hey, the stock market's doing great, the Nasdaq's doing great. But if you literally take out Google, Amazon, Microsoft, Apple, Nvidia, you take these out and you're going to literally see a market that is going sideways, that's barely holding on. And I think this is a great point you're making, David, is that people have to understand that under the surface, right now, it's a very pretty pig with lots of makeup on, but under the surface, there is a real struggle for companies out there in the economy. To be fair, I'm short tech right here. I mean, there's to me, this is lunacy. Doesn't mean it can't go higher. That's why I never put all in on the first buy. I kind of inch in, but I am going long on beaten down plays. And this is where the contrarian mind thinks, right? It's when you analyze human psychology and you recognize people buying Bitcoin at 69,000, not because they believed in it, but because it was the thing to do. It was the hyped up thing. You're now at that stage with these semiconductors. You're at these stages with Apple and Microsoft, where again, the fundamentals don't align. It's just kind of people jumping over each other because they think it's easy money to make. And so for me, when I go to some of these charts, I want to show you guys this. This is really cool stuff. So I bring up charts and I say, all right, well, you know what? I'm not a follower. I'm a leader, right? And being a leader in investing is important. Well, if we look at this chart on 3M, you have a chart of 3M. Look at this going back to the levels here. So 3M has been in a steep downtrend, and we all know this company's not going away. In fact, in a recession, it probably holds up one of the best. So you look at that, and then you go back, look at the support lines going back to 2007 and 2011, and even right here in 2012. That is amazing technical support. Now, again, by no means does this guarantee it's going to be a profitable trade. But again, my job is to put myself and everyone that follows me in a position where the probabilities are for an upside or a profitable trade. And right here, I would much rather be in a good name that is trading at a low valuation that's into technical support versus going and jumping on Nvidia at these crazy levels.
When asked why Gareth wouldn't want to be part of the hype and explosive growth of some of these companies, here's what he replied.
When people chase, it's emotionally driven, right? And again, emotion ultimately gets us in trouble, whether it's in trading, investing, or in our lives in general, right? So the key is you have to look at it and say to yourself, what is the long-term value here? What is the reality of the situation? And when you're chasing, what you're hoping is it's the better fools, or whatever they say, the bigger fool model, right? Where you're hoping that someone else will pay higher, even though there's no valuation that makes sense, just because essentially you want to get rid of it after you jump in at a high level already. So for me, I don't want to be that. I don't want to be in that game. Why play that game when, again, it's an odds base? It's basically like going to the casino and playing a hand of blackjack. I want the odds in my favor. The way I get the odds in my favor is simply by finding good charts, discounted quality names into technical levels. I'm glad to be in these safer names. I don't need the adrenaline rush in my life anymore of maybe I make a lot of money overnight. No, a slow and steady, and I've done this, and I'll tell everyone out this. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race.
This takes us to Bitcoin, which, as you probably know by now, has been trading sideways for a couple of weeks, still playing around the 27,000 level. Most people still wonder what's happening next if Bitcoin is still pumping in 2023 or heading lower. Gareth has a clear view of what's happening next.
You're 100% right, and in fact, that's a glaring red blinking light for us in crypto. And let me just put this in perspective. If you go back to 2021, Nvidia was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech. For instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. And I will say this is that the hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet. There's nothing more that has a bigger cult following than crypto. And I love crypto long-term. I love specifically Bitcoin long-term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle to 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested, but in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation.
So, while we wait for beta setups in Bitcoin, which Gareth already talked about in yesterday's video in case you missed it, these are some defensive plays he's making in other markets.
So what I'm looking for, again, and this is me being defensive. Obviously, I'm net bearish on the market, so I want to be very careful. But ultimately, 3M is just one of the names that's been beaten down in this scenario. You also have, and I'm just looking at my list over here of other names here that have been beaten down. Like something that I'm looking for at least a short-term bounce on, Target. Target has had a big move down here. It's now getting into some major support. This was a former trend line. We can lower that one down to this level. I'll show you guys this level right here, right on these highs, and we're coming right into that. So again, for me, it's looking at these defensive names. Other ones would be Amgen. I think Amgen, again, is another one that's been sold. And by the way, what you see in the markets in general, and look at the move down on Amgen. I mean, this has just been, ever since the tech stocks caught fire, money has rotated from the safety plays into tech, into Nvidia, into Microsoft, into Meta, etc. So what I'm looking for is I'm looking for a reversion to the mean trade here, where it's not like I'm in love with Amgen for the next 10 years, but for the short term, we should see some sort of bounce back up. And again, to me, I would be short big cap tech, long these defensive names like an Amgen, a 3M, and there's a few others that I'm trying to just remember which ones I like overall. Oh, by the way, one other one, PayPal. I think PayPal is really intriguing to me down here. PayPal, it is getting a little bit of a bid today, the last few days, but look at this chart. If I zoom out on this chart, again, way at the lows. We haven't seen these lows since 2017 on PayPal, and it's still printing money. I mean, basically, it's trading at a forward PE of like 10, 11. Now compare that to something like Microsoft, 30 PE, Apple, 30 PE forward PEs. To me, it's rotating the money where the cheapest is because you need to be defensive. Anyone who's not being defensive is opening the door to catastrophic financial loss if we do get a black swan, if we do get a recession that's worse than the Fed has said, and they don't come to the rescue.
How does Gareth determine if markets are collapsing and when to enter or exit them?
What I do is I look at the VIX, right? The VIX myself is where I gauge it, which tells me how much fear is in the market. And what we can see is the VIX is now below 16. Anytime the VIX historically has gotten down in this range, you've had these pops in the VIX. And when the VIX pops, it tells you the markets are usually collapsing. And so for me, when we get down in these levels, it's just almost second nature to be defensive. I want to be defensive in these periods because people are not expecting anything. They're thinking everything is going to be perfect. There's a smooth sailing for here on out. And inevitably, that's when the markets historically have had problems. And the VIX is the best way to view that. Really, to be honest, anything even south of 20 can give you a little bit of a reason to start to short the markets, the big cap tech, and buy defensive names. But I usually wait for 17, 16 on the VIX.
And to close this excellent interview, this is Gareth's advice for everyone who doesn't have that much experience in trading.
It's actually a rewiring of your brain. Just like, if you're a kid and you touch the hot stove, you're going to learn very, very quickly, probably faster than I learned in terms of trading, that method usually ends up with losses. Sure, you might make it big on one trade or two trades, but it's ultimately going to lead to the downside. So for me, at least, that's exactly what it is. And my younger self would have been chasing NVIDIA, would have been chasing all these other things out there, trying to catch lightning in a bottle. And that rewiring, when I get in a trade, so when I was a newbie, my mentality was always like, how much money can I make? Now, when I get in a trade, it's how much money can I not lose being defensive? And then the gains in the market or the gains in portfolio are a bonus, right? And it's a big change in psychology of the brain, but it creates the stability and the long-term growth that actually makes you into millionaires. Most people think they got to play Dogecoin to become a millionaire. You just have to be consistent year after year, smart money investing using the technicals.
Is this how you trade as well? Taking defensive plays so you don't lose your money, even though you're slowly growing your account? Or do you like to take risks and look for the big opportunities? Let us know your investing strategies in the comments below. Also, remember to leave a like and subscribe if you want to get more daily crypto curated content like this every day.